Hi everyone, this is CA Kaushik Mukesh. Today we are going to start with our second day of the revision on the Fema chapter, which will be called as Exports under Fema 1999, also called as Export Regulations 2015. So, from the point of view of the examinations, I just want to cover up the main concepts in these exports. So, let us start with the learning objectives of this particular area. The first one is the concepts that are to be covered. Selected definitions, quite a little bit of two or three definitions are there. Obligations of an exporter, content of section number 7 Bear Act, obligations of an exporter, mode of making the disclosures, authority to whom the disclosures are required to be made, evidence in support of declaration, indication of IEC, submission of export documents, advances against the exports, time limit to realize the export proceeds, project exports, exports requiring prior approval, and exports not requiring declaration. So let us first go on into the basic idea behind the concept of export. So what is the general meaning of the term export? What we generally call, for example, export means, for example, let us take India. Okay, believe that this is India. Yesterday also I told you I'm very bad at drawing this, but example, take this is India. Another country is there called as USA. Okay, another country is also there, China. Example, I am sending goods to USA. I am buying goods from China. Now, when we give some name to these two transactions, whatever we have done now, this we will call as export. This we will call as import. Import is something what we get from outside India, and export is something what we give to a country outside India, a territory outside India. That means this activity is an export activity. This activity is the import activity. Now, our syllabus activity. That means what is applicable for our syllabus. USA transaction is applicable or China transaction is applicable. That means exports are applicable for exam or imports are applicable for exam or both applicable. Both are made applicable for the examinations. Exports are applicable, imports are also applicable. Imports and external commercial borrowings we will be discussing in a different video, which is altogether will be covered as an amendments video again. That means tomorrow's session will be discussing the balance concepts of FEMA, and the day after tomorrow's session we will be taking up ECB along with the imports concept, which contains a lot number of amendments inside. So amendments will be covered separately. So remaining chapter will be covering now. That means except amendments we are going to cover remaining concepts in the next 2 days. So mainly, we are now going to cover up the first concept called as exports under FEMA. Generally, what is the idea and emphasis of FEMA? FEMA concentrates only on disclosures. What I said yesterday, FEMA does not ask your property. FEMA asks you to make some disclosures. Do everything whatever you want, but please tell me before you do, such that I will know whether that is a permitted activity or a prohibited activity or permitted with some permissions. So therefore, one thing to be very clear about this, we are going to deal with the concept of exports. Export requires disclosures, but Act will not use the word disclose. Act will use the word declare. Act will use the word declare. So what declarations I need to make? So that we are going to discuss about. So declarations must be made upon export. Whenever you make an export, there is a requirement of making certain statutory disclosures under FEMA. What disclosures I need to make, to whom I should make a disclosure, what is the time limit in making disclosure, what is the format in making disclosures, all these things will become. All these are discussed in the export regulations in a very, very detailed manner. So today we are going to start with that, and I want to tell you historically this particular question of exports was tested in examinations for 3 times. If I am not wrong, May 2019, a question came from this particular area for 5 marks. So this is one of the most sought after area for the institute to ask in examinations. With that intention, we should show some attention in understanding. On a overall basis, we should not complete this. We need to understand from the basic level definitions itself. So starting from the basic definitions on export, we need to complete everything. Generally, what people will think, for example, let me go into the subject activity and complete. For example, let us take this is India. Let us take this is USA. Now listen. I am from Hyderabad. I want to export goods to USA or export some software to USA. Example, let's take goods first. I want to export some goods to USA. Okay, now what happens? The goods will go on like this and it has to reach USA. Okay, now once the goods reaches USA person will send me the money that I am agreed to. That means the contract will be having certain amount of consideration into it. Therefore, that person will be transferring some amount to me. Now, this is called as an export. Generally, people will think that goods should go outside India, that should reach a person called as a buyer, and buyer should pay consideration. This concept is called as an export. No. Generally, what we think, sale is an export. Sale, if it's made in India, that is called as a domestic sale, and if it sale is made outside India, we call it as an export sale. That is a general idea behind a normal export concept. But we are reading law, which requires a declaration. If this be the case, what will be the problem? Let me explain clearly. For example, this is India, this is USA. Okay, you will send goods to USA. That person will give you the consideration. If you call this as an export, export will be completed after receipt of a payment, which will be receipt on a future date. That means till the date he will not make a declaration. If you call sending the goods outside India and receiving consideration is an export. Export has nothing to do with consideration. I repeat once again, concept of exports under Fema has nothing to do with consideration. Exports means what? The lawmaker has defined that take this as India, this is your place of export. So you are exporting goods to this particular place. What he says is sending the goods outside India is called as export. I repeat, sending the goods outside India is called as an export. I received consideration or not, I am not at all bothered about that. Export regulations concentrates only on have you sent the goods outside India or not. Two answers. I didn't send, no export. I sent the goods, it's an export. Hey, I didn't receive consideration, that is not my headache. That will be looked after by a next section called as section 8 and 9, realization and repatriation of proceeds. So how to realize the amount once export is completed, dealt by section number 8. How to repatriate, how to bring back to India, how to convert, how to keep in an account separately, that will be dealt with. So why you are unnecessarily creating a headache? I am asking you, declare. When to declare? If you tell the declaration will be made upon completion of consideration receipt, means declaration will be made at a future date, which is not the idea of the law. Lawmaker want to tell what I said in the previous class and what is the first words what we spoken today. Fema, do anything, but please tell me before you do. Please tell me before you do. Before you do means before making an export itself, you need to make some declarations. If you tell that receipt of consideration completes an export, then you will declare at a future date, because obviously all foreign exchange transactions will be on a credit basis. 99.99%. No one will make cash transaction on spot. Always it will be a credit. That means I will make an export today, I will receive consideration at a future date. That's all the story what we have seen in SFM hedging concept. So SFM hedging forex chapter, international financial management, what you have seen, all the hedging techniques. Hedging will be done for what? For today's transaction. Hedging will be done for futuristic, probabilistic transactions. Since the future is uncertain, to knock that uncertainty, we will be going for a hedging which is called as a stop loss strategy. So hedging concepts also will come under Fema, but in the concept called as ECB. At that time, I will be discussing in depth about how hedging will be done in foreign exchange from the law point of view, not from SFM, for the kind information. So point number one, export means what? First thing, export means sending the goods outside India and receipt of consideration. No, sending goods outside India. Sending the goods outside India in which form? See here, I'm going from or India, USA, for example, Nepal, Nepal, and next one, China. So, three countries. Why I have taken three countries, you can understand now. I am from Visakhapatnam. I am sending goods to USA. I will not send through air, I will send through water. I'm going to I'm from Vizag. Example, I want to send goods to Nepal. To Nepal you can also go by a roadway. I am a person from Vizag and I want to send goods to China, which are perishable commodities and which are light material which can directly handle and go on a flight. That means mobile phones, chips, silicon chips, etc. Now this will be going directly to China through air. Now land, air and water, which of the three will be covered by the export definition? All the three will be covered. I sent the goods to USA. I sent goods to USA on a sale. Listen carefully now. If the goods are sent out of India for sale, we will call it as an export. For example, if the lawmaker have used the words sale is an export, our Medhavis, what they will do? They will always try to defract and deviate and contravene the law. Whenever law is prepared, person will always look to make a contravention and deviate from the particular provision. Everyone want to evade the provisions, escape from the applicability. Therefore, if the lawmaker would have used the words sale, what our Medhavis will do? They will make a lease for 50 years, which is obviously like a deemed sale. Therefore, lease is also an export. Hire purchase is also an export. Consignment is also an export. Sale and lease back is an export. Everything. Sale is not the export. Sale is also an export. Sale, lease, hire purchase, any other arrangement in the name of a sale, any other arrangement which is having a nature of a sale and lease will also be called as export. So I want to make it very clear before we start with the Bare Act. So this is how this section has been structured upon. Select definitions. First one, export. What is an export? Export includes in case of goods and services in a physical form. In case of goods and services in a physical form, taking or sending out of India either by way of a land or by way of a sea or by way of a air. As of now, I said you. And taking or sending out of India and receipt of consideration is not there. Receipt of consideration is not an export. Once the goods crosses the territorial waters of India, yes, export has been done. You have to declare. So taking or sending out of India by way of a land, sea or a air, for what purpose? Just now I said you, it may be sale, it may be lease, it may be hire purchase, it may be any arrangement or agreement, anything that makes an export. Next issue. In case of a software, software can be of two types. I can send software through pen drive, DVD drives and other hard drives. Or second one, I can also make an export through cloud. For example, I want to download Windows MS Office. For example, I want to download MS Office. What is the idea behind MS Office download in India today? For example, I will go to MS Office, I will go to Microsoft website, and what I will do, obviously I will download MS Office trial version. Trial will be given for 30 days. Once the 30 days is completed, he will ask you to purchase a license key. You will purchase a license key. He will ask you the credentials of your bank account or a debit card or a credit card, as the case may be. You will make the payment. Immediately he will release a license key. Once the license key is activated, your software will become updated. Now answer my question. For that USA person, is that an export or not? Because he is receiving money from you. He is receiving money from you. That means money will be given by you to a party agent in India. That agent will convert and repatriate to USA. From their point of view, if you look into, that is an export for them. That means they made an export into India. That means to India they made an export in a physical form. Do you receive any pen drive or a DVD drive? Through cloud system it was getting updated. Therefore, those type of exports are called as an export of a software service. Includes the transmission of software through electronic media. This includes cloud storage, etc. And so many other ways are also coming. Innovative techniques are there. Through anything you can get into. So therefore, export definition was completed. Export definition in case of a goods taking or sending out of India by way of a land, sea or a air for the purpose of a sale, lease, hire purchase or any other arrangement. In case of a software service, it includes software through an electronic media. Next one, what do you mean by goods as defined under Sale of Goods Act? Now there is an apex bank for all these exports and imports called as a Exim Bank. Now the Bare Act content starts. Concept of exports. Bare Act content. Obligation under section number 7. What is this obligation under section number 7? In case of export, whenever export is made, there are certain obligations that are cast on exporter. What obligations do he have? Just now I said declaration. What I have to disclose or declare, that we are going to see now. Obligations under section number 7. In case of exporter of a goods, declare the full export value if the value is ascertainable on the date of export. Repeat once again, obligations under section number 7. Those who are watching the video, please try to revise along with me such that in the examination time you can never commit any kind of mistakes with regard to our revised topics. So please concentrate properly. Like in class, I can't torture you directly, but you should understand one important thing. Always revision sessions should help you. So please concentrate properly. Obligations under section number 7. In case of exporter of a goods, if I am an exporter of a goods, what is my obligation? Declare full export value. That means how many goods are there, at what price you are going to sell. Declare entire full export value if the value is ascertainable on the date of export. If the value is not ascertainable on the date of export, then what will be the situation? Now the question will arise, why value will not be ascertainable on the date of export? Due to many reasons. I am making a transaction or an export with a country called as Japan. Now Japan will make import and I am making an export. On the day, due to many external factors, rupee and Japanese yen are not trading together. You may ask a question. We have a concept called as a cross currency quotations. We will calculate like that. That is for the whole idea of IFM. But practically seeing, whenever there is no rate available, generally they will stop trade on that day and they will trade on the next succeeding days where the value is ascertainable directly. That cross currency quotations and all those things in SFM, what you learn, will be used to do currency arbitrages, not to make a transaction invoicing. So that we should understand. We should not club both the concepts. Because I have a knowledge on that particular IFM, I am telling you that concept will be useful. Cross currency quotations, when they will be useful, CCQ concept will be useful when you want to go for a currency arbitrage. That means two currencies are not quoted together. I will now calculate a cross currency quotation by taking an uncommon currency and I will take it which is common across both them. So point is, there will be two currencies which are not traded together. Now I will take a currency commonly for both of them and I will tag a rate between two unquoted currencies now. That will be useful when you are going for an arbitrage. We are not going for arbitrage here, we are making an export. So all these things I can't waste time now, but you should understand one very important point. Obligation of an exporter. Sometimes value may not be ascertainable. That's a point number 1. So why not ascertainable? Exchange rates may not be available. Or another very good reason is there. Sir, always sale can be divided into two types of sale. Determined sale, that means a predetermined sale, and not a predetermined sale. I will give some good examples to understand. India. A person in India will export goods to USA with an agreement that he will sell those goods outside India for US dollars 1 lakh. That means there is a ready buyer available already with whom we entered into an agreement. This is one way. And second way, I am from India. What I will do, I will establish my own entity called as X Incorporated in USA. This is a subsidiary company to this company. I will send the goods to this company and the goods will be sold by this company to a person outside India. It will not purchase. It will act like an agent to me. This subsidiary acts like an agent to this holding company and it will sell the goods. Now, agent can complete the sale today itself or at a futuristic date. For example, I made a sale today to my agent outside India. Now, agent is my subsidiary company. What I ask them, so please sell all these goods outside India. Now, until and unless they sell all the goods outside India, how can I get a sale rate? For example, I am sending 10,000 units of particular goods to my agent. I ask my agent outside India, please sell them. They said, sir, obviously it will take 3 months time to complete the sale. Okay, in 3 months how many units you can sell? I asked them. They said that, sir, how can we know? Sometimes all the 10,000 units may go in next 3 4 days. Sometimes even after 3 months it may not go. Then how can I tell how many units? And agent will not purchase goods. I should make you clear that agent is like a pass through. You can't directly sell there. I picked up a foreign agent and the agent will sell. Now, if the agent could not sell all the goods, whatever you have sent, is that the mistake of the agent? Maybe commission may be less to him if the sale is not made. But the market is not so good. I can't sell all the 10,000 units. Our market is very good. I sold all the 10,000 units in 10 days itself. Now we'll get the realization completely after 10 days. But if you could not complete the sale within 3 months, then what will happen? Obviously, the goods will come back again after 3 months. That means there are two types of sale which will get completed on the date of export itself, sale which gets completed at a futuristic date. Now doubt will come. I should make a declaration of what value? Full export value. How can I know full export value in this particular case on the day of export itself? Therefore what the law has said is, in this case declare $1 lakh in the export declaration form, no doubt. But in the second case, declare expected value as per the overseas market conditions. That means how many units you are selling? 10,000 units. If the sale is made today itself, on the date of export itself, if the sale is made of all the 1 lakh units or 10,000 units, whatever you have said, what would be your realization? For example, let us take these are 10,000 units. 10,000 units into, for example, each dollar is 70 trading. So 70 into 10,000 will become 7 lakhs. So therefore, please declare that value in the export declaration form. So that's what he want to convey out of it. So please have a look into this. Obligation under section number 7. In case of exporter of the goods, if the value is ascertainable on the date of export, declare full export value. If the value is not ascertainable, expected value has to be declared, which would be chances probable realized upon sale outside India. Now everyone will get a doubt, sir, I will declare 10,000 into 70 in my declaration form, but I receive only 7,000 goods amount to me. For example, let's take these are saris or these are some clothes. I sold only some amount, but remaining I didn't sell them. Then I will receive only for 7,000 into 70 rupees. That means I will receive 7 lakhs or 4 lakh 90, 4 lakh 90. But I declared 7 lakhs in export declaration from that. What is the remedy? Note, RBI may approve a reduced value if you can show the proof that you can't complete the full trade. This is also there in section number 7 Bear Act. So we are not taking a direct session. Regular session will have much more in-depth clarity and in-depth understanding. But as far as possible, as the time permit, I'm making it as much clear as possible. If you can read the Bear Act, you will see that word RBI may also permit for a reduced value. In case of exporter of services, declare the full value of service for which the payment is received. That means when service is made, ascertainable, non-ascertainable concept will not come for the service. Therefore, declare full value of the service you are going to provide. Next issue, mode of making a disclosure. Now comes the important aspects. Mode of making a disclosure or declaration. Now we need to understand, first thing we came to a clarity that we need to declare. Declare in which form? In case of goods, exporter has to declare in form EDF, has to declare in form number EDF in two copies called as a duplicate. So therefore, first thing, in case of goods, exporter has to declare everything in a form called as a form EDF in a duplicate. That means in two copies. And two copies will be sent to whom? COC. What is COC? COC means Commissioner of Customs. Commissioner of Customs is called as a COC. COC means a Commissioner of Customs. So the point that we need to understand in this connection is, in case of a goods, exporter has to file form number EDF, full form is export declaration form, in a duplicate in two copies to COC. What is the duty of COC? Authenticate and forward. Authenticate, sign and check whether every content is filled up properly or not, and forward the first copy to the nearest RBI office, and the second copy in these two copies will be given back to exporter. This exporter will submit to the EAP. Now the question will come, sir, I have to send to AP within how many days? That point is also there in our examination. We will discuss at a procedure further point, further. So in a further contents, we will be discussing about time limit to declare to the authorized person. I repeat once again as a revision. Point number one, we are going to make a declaration. Declaration in case of a goods, we need to declare in form EDF in a duplicate in 2 copies. 1 copy and given to the COC. He will sign, authenticate and check whether all the contents are properly filled or not, and forward the first copy to the nearest RBI office, and the second copy will be given back to the exporter. That exporter will again give it to the authorized person for the collection of proceeds of export on the due date. Next issue, in case of software, exporter has to declare in form softex. In how many copies? In 3 copies he has to make a declaration. And in the previous form that was submitted to all the 2 copies are submitted to COC. Here we will submit to DOMIT, designated official of Ministry of Information Technology. Designated official of Ministry of Information Technology. Okay, that person will be doing. Maybe you know or not, I don't know exactly. In India there are 2 types of customs ports. We will call port. There are 2 types of customs port, not seaport, airport. The port illa. I'm not talking about those ports. There are 2 types of customs port: customs manual port, EDI port. I repeat once again, customs manual port, EDI port. What is CMP? What is EDI? Customs manual port is again divided into 2 parts, which will be through the vessels, etc., which will be through a postal. Okay, through postal department also you can make, or through vessels by a private entity also you can make. So postal orders will be there, normal vesseling will be there. So both will be called as a customs manual port. Physically goods will move. Now I will ask you a question, answer. First thing, let's imagine a situation. India is very popular in exporting the softwares. Now how the software will be sent? Software will be sent through pen drive. Software, what to say, the memory or the size of the file will be around 70 GB, 80 GB. Sometimes it will be running in terabytes. Those will prepare for big entities. The software will be running into TBs. Now how can they send in pen drives, etc.? That is very dangerous, and that can be leaked at any point of time. 100% security is required, and I should check whether that software is a correct software or not. Who will do all these things? Do you ever imagine what will happen in India? So main thing that happens is there is another port called as EDI port. It is not under the control of Customs Department. It is under the control of Ministry of Information Technology. EDI means Electronic Data Interchange Port. That means all your software exports has to pass through this particular port called as a EDI port. That EDI port will be in the control of Ministry of Information Technology. That is called as a DOMIT here, a designated official of Ministry of Information Technology. That person will be receiving 3 copies. He will authenticate and forward. He will do authentication and forward. Forward the first copy to whom? Nearest RBI office, first copy. Exporter to second copy, who will give to the authorized person, and the third copy will be retained by the designated official of Ministry of Information Technology. So this is how the authentication will be made. Hope everyone understand up to here very clearly. So this is a chart. Pause the video and look at the chart carefully. And by the way, I forgot to tell, material will be given as a Google Drive link in the tomorrow's class. That means I have some issues with the material, therefore I couldn't give today. So tomorrow, along with the video, whatever we do, there will be a description link. If you click that, you will get the download of the entire colored material on Fema, which you can cover up the entire Fema, the full content. In institute material, you can see it will be running around 70 to 80 pages Fema chapter. That you can complete just in 1.5 to 2 hours if you go through the charts material, the color charts material that I have given you. Okay. So anyway, let us go to the next concept. So evidence in support of declaration, indication of IEC and submission of export document. So let us go into this concept. Evidence in support of declaration, indication of IEC and submission of export document. Evidence in support of declaration. Okay. Let us first try to understand one basic concept before we start. Yesterday we completed a concept called as PRI and PROI. What we learned, PRI means a person who stays in India for more than 180 days in the preceding financial year, and if he comes to India for any of the three purposes, or if he goes out of India not for the three purposes, and if he comes to India for the three purposes. Yesterday I got a very good response for the way in which that particular concept was taught: permanency and temporariness. So those three areas will have some amount of permanency. If I am going outside India for that three purposes, permanency attaches there. If I come to India for the three purposes, permanency attaches here. So obviously I will become PRI or PROA as the case may be. Yesterday we have done illustrations. I think everyone is clear up to here. So yesterday I asked you a question. What is the purpose of bifurcating the persons into PRI and PROI? Exports rules are applicable for PRIs only and not for PROI. Where it was said, here it was said. Evidence in support of declaration. That means whenever you are submitting EDF or Softex, first thing we need to submit three evidences. What are the three evidences that we need to know? See here. Let's have an understanding and clarity. Let's have some clarity. Point number one. Three declarations I need to make, or three evidences I need to provide. First thing I should tell that I am a PRI and I am having a place of business in India. That is the evidence number one. I should show an evidence. Business establishment. He will ask for some photographs of the godowns, etc. You have to provide all these things. Number two. Second issue that we need to learn here is I should be a PRI and having a place of business. Full export value evidence has to be shown. Sir, already I have shown. There you have given only the full export value, but you need to here show the cost auditor's report. That means you should tell that this is a cost, this is a markup value, therefore I am keeping this much amount, like that you should tell. For example, each product is costing around, each product is costing around $1,000 or $100 or $10. Why $10? How you got that amount? Maybe I can also tell like this. Always exports will augment India's GDP. It will increase India's GDP, and it will also increase the forex reserves in India. For example, I am making a sale to my friend outside India. To cheat the government, I have undermined the invoice value. Chances are there, generally that product will be available in India for around 70,000. That means if you convert into dollars, it will be around $1,000. Now I am trading only at $800 for my friend. That means, is it a lower value or not? You can give a discount. The discount should be clearly given on the invoice. This is not the way to make an export. Therefore, show the evidence that that is the full export value. This is a second evidence I require. And the evidence number three. The third evidence that we need to declare to the along with the export declaration form is very, very important. Look here to the scenario. This is India. I want to sell to USA. Directly ship will start here and directly it will reach USA just in 1 second. It has to pass through various seaports and it will reach USA. In the meanwhile, I may reach certain countries or places like UAE, Saudi, all these places I may reach. So through that we will go. That means when it comes to Saudi, when it comes to Abu Dhabi, or it will come to Dubai, or it will come to Oman, some places where the seaports are there, it will pass through and go. I came to know, and it will be taking all around 60 days to reach USA. For example, let us take like that. It will take 60 days for the shipment to reach USA. Okay. Now answer my question clearly. If it takes 60 days to reach USA, it will be on the onward journey in for 60 days period. Now that person came to know that these goods are having heavy demand in Abu Dhabi. Now immediately what he will think, I can inflate the price and I can sell some goods there, and again I will continue the remaining trade in USA. That means the ship will go for USA, but it will stop at Abu Dhabi or it will stop at Dubai, sell some goods here, and again it will start to USA. This should not be the way to make an export. Don't cheat the government of India. One journey means that should be the last destination place. That means if you tell that I want to export to USA, that should become the last halt for you. Again, in the middle, you should not merge with another area. That means you should give a declaration evidence that you are a PRI and having a POB in India, and declaration of full export value. The most important point is place of destination is the final place of destination. That means no other halt will be there. Leg journeys they will call, second leg, first leg journeys, that is not permitted. Once you say a place, that should become the final place of destination. That should be a final destination for you, not the movie Final Destination. Here final destination is required. So that's the idea of the lawmaker. If you sell at other place, you will receive money, but you will not declare that in the export document, then government will get cheated. I should not get that betrayal from you. As simple as that. Next one, obligation to specify IEC. Sir, what is IEC? Importer exporter code number. Every time whenever you make any kind of export, in the export declaration form, you should write that number clearly. So exporter shall indicate IEC number on all the declaration forms. Submission. This is important. Just way back, I discussed about this concept. Second copy will be given to whom? Given to the authorized person. Within how many days? This is the number of days. For example, submission of export document. The export document shall be sent to the authorized person in case of a goods within 21 days of export, within, in this case of software, within 21 days of certifying the soft form. Within how many days? 21 days of certifying the soft form. Who will certify and authenticate soft form? DOMIT. What is DOMIT? Designated official of Ministry of Information Technology. By the way, I forgot to tell one important point in this connection. All the time whenever we are seeing here, in case of goods EDF, in case of software softex, in case of services not being softex, there are many other services which are not software services. If that export is made, then what is the situation? In that case, EDF or softex, no forms, no declaration required. If it is not a good, if it is not a software service, other services if you provide, form declarations are not required. Next issue. This question was asked in examination for 5 marks already, latest attempt. That's what I told you at the beginning of this particular chapter, topic export concept. That was asked, if I am not wrong, in the May examination. This is the question that has been asked. Very easy, but try to understand clearly the concept behind. So, advance against the exports. What do you mean by advance against the export? Performance guarantee. What do you mean by that? Let's try to understand. For example, I am from India. For example, in India itself, X and Y want to enter into a contract where X said that I will purchase a house from you. Y said that, okay sir, I will block the apartment or a flat. Immediately Y will get it out. I will block for 15 days, 20 days. Some people, customers will come. I will tell a no to them. After 20 days, you come and tell no to me. Then what is my situation? Therefore, pay token advance. Token advance always ensures the performance guarantee. Now, answer. If for a small real estate transaction itself you require an advance, this is a forex transactions running in crores and hundreds and thousands of crores. Then what is the guarantee that you will really buy my goods on the date of on the date of export? If you return back the goods, what is my situation? The total manufacture will become waste. Yes or no? Now two scenarios will come. Scenario number one, if I send goods to you, you send me back, then what is my situation? I will be at a risk or not? To counter that risk, Indian exporters can take an advance. That is the point number one. Now you may get it out, sir. For the guarantee of a performance, we are taking advance. Advance means it will not be the full value. It will be around 5% or 7% of the total export. For example, I am making an export of $1 crore. 7% will become $7 lakh advance I will take. $7 lakh advance I will be taking from the particular importer. That means I am the exporter, that person will be an importer for me. So what I will do, being an exporter, I will take some advance from him as a guarantee for the performance of the contract. But on the day of export, he didn't make the transaction. He sent back me the goods, saying some concept, some sort of controversy created. Quality is not good. Actually, quality is very good, but he is creating an issue that the quality is not good, that what was not submitted within time, or this is not the standard of goods I expected, blah blah, whatever he says. He said that this is not the way in which the export has to be done. I will not pay consideration, he said. Fema can do anything? Fema cannot do anything. In this case, another act will come into existence called as Arbitration Conciliation Act, that will be taking up international commercial arbitrations. Another revision session will be there on that particular chapter as well. When we come to that concept, I will discuss about the connected issues. Okay. Foreign transactions are linked in the following way. You are from India, you are making an export to a foreigner. Now you will collect an advance from him. Very good, completed. But there is a dispute going on between Indian exporter and foreign importer. These disputes are resolved using arbitration conciliation concept, which will provide for an international commercial arbitration. International commercial arbitration is possible. Okay, how the international courts will run, how the arbitration will be made, that was defined by an organization called as a WTO, World Trade Organization. All these things we will see in the concept called as Arbitration Conciliation Act. Another very interesting act is there we will be discussing upon. But Arbitration Conciliation Act I will cover entirely, not just revision, I will cover completely. So at that time we will discuss about that. But as of now, please look at here. Advance against export. What is the concept of advance against export? Just now I told you, performance guarantee, basic conditions. You can collect advance, no problem, but the conditions are, there are three conditions. Once you collect advance, the shipment should reach that particular person within 1 year. Documents related to the export shall be routed through authorized dealer. That means export documents will be there, that should be given to the authorized dealer. Why authorized dealer? Every document why I require to give to authorized dealer? Authorized dealer is a pass through between RBI and the person. Whenever you are making a transaction, you are a entrepreneur. The entrepreneur and RBI, in between there is a pass through called as a authorized person. He will look at on behalf of RBI. He is the third eye of RBI, to be very clear. RBI will have two eyes. The third eye will be the authorized person. If the third eye see, it is as good that both the eyes have seen him. That's the idea behind. He is an agent to RBI. He is not an agent to me. Okay, so that's the idea behind authorized persons in Fema. So before going into authorized person, anyway we will discuss about authorized persons today itself, but before going into that, let's try to understand. Whenever you take an advance, you can take an advance, but some conditions are there. Shipment should be made ready within 1 year, and documents will be routed through authorized dealer such that he will check how much advance they have paid and how much is the full export value, whether full export value has been received or not. All these things he will look into. Most important point, can I pay interest on the advance received? Can I pay interest to that party? You can pay, but that interest cannot go beyond LIBOR plus 100 basis points. LIBOR plus 100 basis points. Now everyone will be surprised to see, sir, if I receive an advance is for performance of a contract. Now I should be doubting him. He should not doubt me. Then why I should pay an advance to him? Why I should pay interest to him? A very good question. But lawmaker will not write the law foolishly. Some logic will be there for every point he write. Simply we can understand in the following way. India is strong in imports or in exports? India is strong in imports, which should not be. And it is very weak in exports. For example, I am going to sell the goods to a person in USA. I said USA is very strong in exports. China is very strong in exports. Let us take, I am exporting to China. Let's take like that. This coronavirus person is there now. I am going to sell to him the goods. Sorry, I am going to purchase. I am selling goods to a person in China. That means I am exporting to China. I purchase goods from China and the same goods I am exporting to them by branding it made in India. Okay, so I'm sending back the same to him. Let's take an example. I'm sending goods to a person in China. Now answer, China is strong in imports or exports? China is having import, but it is very strong in exports. Now Chinese person will obviously ask, Arya, you are weak in export. I am very strong in export. Actually, the need to export goods is for Indian exporter, not to me. Then why I should pay an advance? If you don't pay an advance, performance guarantee is not attached. If personal performance guarantee is attached, you have to pay me an advance. and you are weak in export, why have to pay an advance? Therefore Indian government said that you give advance as a performance guarantee. He will pay you back along with an interest if you honor the contract on a due date. That's how the concept has been derived. So therefore, interest can be paid, may be payable, it's not shall, may be payable, but that interest should not go beyond LIBOR plus 100 basis points. About LIBOR and how it is derived, we will see the concept called as external commercial borrowings. So three conditions, basic condition. What are the three? Within 1 year it should be completed, routed through authorized person, and interest on the advance should not be going beyond LIBOR plus 100 basis points. Next one, failure of exporter. If the exporter fails to provide the shipment within 1 year, then what will happen? Nothing will happen, sky will not fall. Refund the advance again, but that refund should be made in the intimation of the RBI. Next issue, this is important. Shipment should be made within how many years? 1 year. For example, a person from Sri Lanka came to me. He asked me to prepare a supercomputer. India is very popular in manufacturing the computer hardwares. So they said that yes, we will prepare a supercomputer, no problem, but it will take 18 months time to complete it along with the proof checking, etc. He said that okay, take your own time, but please export it to us. They said okay, deal made, and the cost of that supercomputer is 5,000 crores. For example, they want to use it for their stock markets and satellite linking, etc. It will take a lot of cost. India's supercomputer is costing around 10,000 crores. So he said that I want a supercomputer. If it will be around 5,000 crores, we will pay you. Please manufacture for us. Everything was done, completed, done. Now you should understand one very important point in this connection. You sent everything, everything has been completed. Now the next situation is, my shipment itself is for 18 months, means it is for more than 1 year, but the lawmaker is telling that shipment should be made within 1 year. That means in this case, if you literally interpret, advance acceptance is not possible, but this is risky for me. Therefore government said that if the export itself is for more than 1 year, you may accept an advance even in that case, but only with the prior approval of RBI. This is the next issue. Next one, time limit to realize the export proceeds. Time limit. I completed export. Now, within how much time I should receive the export proceeds from that importer? So, general exports you should realize within 9 months. Warehouse exports 15 months. Special exports like exports made by SEZ, FTP, HTP, HTP, BTP, etc. All these people, you have to realize the export proceeds within 9 months. That means general exports 9 months. Special exports 9 months. Warehousing, since it has to go from bonded warehouse to that place, I have given an extension of 15 months totally. So that period is a static final period? No, that will be extended with the permit of RBI. So let's revise everything. The point number one, within how much time I have should realize? General export 9 months, special exports 9 months, and warehousing exports 15 months. Very good. Next issue, project export. Just this particular point I have to keep it on hold because I have to complete this as a link to another issue. So 11 and 12 concepts we will not discuss here, we will discuss at a different place when we come to current account transactions concept. So this is all about the concept of exports under Fema. So think everyone understood the concepts clearly. I can't revise in this video once again. You go back to the video and refer to the video as many number of times as possible and do the revision properly. Let me first take this concept. Selected definitions completed, content of 7 completed, obligations of exporter completed, mode of making disclosures, authority to whom, evidence, indication, submission of export document, advances, time limit to realize the exports. These concepts we have to cover. So I will cover at a different place. So maximum 90% of the concept has been completed in exports. Remaining will complete as a linking concept to other things. So this is the first issue that we need to complete. Next issue, we are going into the next part of our concept. Let us check out this. First, before we move on to this particular concept, I have to make one very important point. See here, point number 1. If you take stock exchange as an example, I am a buyer, there will be a corresponding seller. Okay, now look at the scenario. Buyer will give buy order to a stockbroker of buyer. Seller will give sell order to a stockbroker of seller. These two people will meet at a stock exchange. In this stock exchange, your buy and sell quotations will meet at the transaction house, where booking house will be there that will book your buy and sell. Matching will be done between buyers and sellers. Complete clarity about how stock market actually works, from the date of clicking a purchase or buy, from the date up to the sale and debiting or creating into demat account. I will clearly discuss about that in the chapter called as a Securities Contracts Regulation Act 1956. Just try to understand this basic idea. Why we are suddenly going into stock exchange? There is a reason. I am a, for example, let's take in this way. I am a buyer. I am a buyer. There is a seller. Buyer will give a buy order to the stockbroker. Seller will give a buy or sell order to the stockbroker. These two people will meet at a stock exchange. Matching of the transaction will be done. Share will be purchased by him, sold by this particular person. This is how it happens. Now, this person is an authorized person. This person is also an authorized person. Okay, now he is a agent to me. He is agent to the other party. Okay, now listen. There is a importer. I am a exporter. This importer will give to authorized person. This exporter will take from authorized person. Authorized persons are not working in this way. This person will send it to an authorized person. I have to collect from the same authorized person. That means authorized persons are not agents to me. Authorized person is a governing body. Authorized person is an agent to RBI, not to you and me. He will not do the things according to our instructions. If I tell authorized person do this, do that, he will not do. He will do according to the master directions given by RBI, not as per the directions given by you. If you give any instruction to him, he will not damn care you. Who you are to give me an instruction? I'm not your agent like a stockbroker. So one thing to be very clear: authorized person is not working like a stockbroker. Authorized person have his own obligations and rights. So he is not an agent, he is a governing body. Since RBI cannot activate on person to person basis, RBI have sent their Duta. They are the Dutas to the RBI. So they are the agents to RBI. Do whatever I can do. Through the master directions they will give. Master directions and master circulars. You can see master and agent. Who is a master? RBI is the master. You are what? Person who has to obey the master's idea. Person who is obeying the master idea is called as the agent. Therefore, RBI is the principal. You are the agent to RBI, not the agent to importer and exporter. So authorized person and stockbrokers are not one and the same. They are completely different. Authorized persons are agents to you or to RBI. To RBI, they are not agents to the importers and exporters. So now we are going to deal with authorized person. Whenever you want to buy foreign currency, whenever you want to sell foreign currency, that buying and selling should be done through an authorized person. So how to become an authorized person? Sir, can I take an authorization? Yes, you can take. What is the procedure? See here. There is a person. This person should make an application to RBI. For what purpose? For the purpose of getting authorization as a authorized dealer, money changer, offshore banking unit. Sir, what is an authorized dealer, money changer, offshore banking unit? Okay, before going into that extraordinary concept, first try to understand the basics. I am a person. I want to get authorization. What I have to do? Apply. Apply for what? Apply to either become a authorized dealer, money changer, offshore banking unit. What is the difference between authorized dealer, money changer, offshore banking unit? So let's try to understand that. Authorized dealers can do anything in foreign exchange. There are three types of authorized dealers. Authorized dealer number one, stage two, stage three. First level, second level, and third level. So the biggest level will be the first level. Next one, second, and next one, third. That means greater level, lower level, and much more lower level. You can be having three statuses of authorized dealer: AD1, AD2, AD3 they will call. They can do all kinds of foreign exchange transactions. Okay. Now, money changers and offshore banking unit. Money changer, they cannot do anything except taking foreign currency, selling foreign currency, buying foreign currency. Other things they can't do. Purchase of a foreign security, they can't do. Immovable property transactions, that has to be done, they can't do. Next one, I want to purchase some shares of a foreign company. Can they do? No, cannot do. Many foreign exchange transactions they can't do. Who cannot do? Money changers. Name itself is telling money change. I will convert travelers checks into cash. I will convert coins into notes. I will convert dollars into rupees. That's all. I'm a changing of a money. Offshore banking unit. This is a foreign branch of a Indian bank. SBI foreign branch. Canada Bank foreign branch. These are called as a offshore banking units. Authorized dealer is of a three categories: AD1, AD2, AD3. What AD1, AD2, AD3 can do, that we will discuss now. This is not applicable for examination, but still to make you clear about one important concept, I have one document to make you clear about this. Let's have a look. See here, authorized person under Fema. Who is an authorized person? RBI cannot do all transactions in foreign exchange by itself. Hence, RBI delegates its powers. Who is the delegatee? RBI. Who is the delegator? Authorized person. Its powers to the authorized persons with suitable guidelines. These guidelines are called as a master directions to deal in foreign exchange and foreign securities. Okay. Now, authorized dealers are of three types: AD category 1, 2, and 3. Okay, AD category 1, commercial banks, state cooperative banks, urban cooperative banks. I don't want to waste time in repeating these answers since these are not applicable for our examinations. Pause the video and please have a look into it. Okay, and I will show you. Please pause the video and then look into the issue. So I can't waste time in discussing about this in a normal revision session. Actually, these are not applicable for exam. To have clarity, you can see this. Activities by AD category 2, activities by AD category 1. So if you want to make a look, pause the video and please see this. So anyway, one thing is clear. There are three types of authorized persons: authorized dealer, AD1, AD2, AD3, and money changer, offshore banking. So who is a money changer? Who is a money changer? See here. Authorized money changers. You may get it outside. What is this document you are opening suddenly? This document is my research document on Fema. I have a book with me, that book copy. That means through this only I learned many concepts of Fema. It contains all illustrations and concepts inside the Fema area. So that contains A to Z about the Fema concept. Anyway, so authorized money changers. Who are these authorized money changers? Let us have a look. Money changers are authorized by RBI only to purchase foreign currency only, not securities, not any other immovable property in foreign countries, only foreign currency, which is in which form? Travelers checks, notes, coins, or sale of foreign currency in the form. That means you go to an airport. You go to an airport, there a person will be sitting there. If you give rupees, they will give dollars. Those are called as a money changer. They are not authorized dealers. You can't keep that name for them. I want to purchase immovable property outside India. Money should go or not. That money I can't transfer through these people because these are only changing money. Give rupees and take foreign currency. Or give foreign currency and take rupees back. So they can sell or purchase foreign exchange. There are two types of money changers: full-fledged money changer, restricted money changers. About these also not applicable for exam. Pause the video and look into the concept. I can't waste the time in these issues now. So next issue, offshore banking unit. Just now I told you offshore banking unit means what? It is a foreign branch of a Indian bank. Offshore banking unit is a new concept under FEMA. An offshore banking unit can be appointed as an authorization. Offshore banking unit, all these things also you can read. Mainly what I want to tell is this concept of offshore banking unit is a branch of a Indian bank. Which branch? Indian branch or foreign branch? Foreign branch. So this is the important point to note. The OBU would be virtually a foreign branches of Indian banks. but located in India. Sometimes that location will also be there outside India, but there are some restrictions to that. Please read this document as well. Okay, not applicable for exams, just to have some clarity. So what we learned now, one thing we came to understand in this connection. First one, authorized person means a person who applies to RBI for getting authorization either as a AD1, AD2, AD3, money changer or offshore banking. Can the RBI give license? Yes, it can authorize. Can it take back? Obviously, yes. If you do enough overaction, what RBI will do? It will revoke the authorization back. If it is required in public interest, if you fail to comply with the conditions, not ends, it is conditions and interest of the provisions of the Act, and person granted with authorization will be called as a authorized person. Authorized person, now this is very important. Fema is having 5 parts: Act, rules, notification, circulars, directions and orders. These are the 5 partitions of Fema. Act is applicable to you and me and to the authorized persons as well. Rules are applicable to you, me and authorized person. Notifications are applicable to you, me and authorized person. But circulars and directions and orders are applicable only for authorized persons only. Those are not applicable for you and me. So you should understand that very clearly. For example, master directions under FEMA. Any master directions randomly, if you take, that, let us take this. This is a official RBI website. Official RBI website. Master directions. You can see here master directions. Okay. Master direction, export of goods and services. Okay. To whom it was, these directions are applicable to all authorized dealer category 1 banks and authorized banks. So this is applicable for authorized dealers stage 1 category banks. Okay, to those it will be applicable. Sir, authorized dealer, okay, what is this authorized banks? That's another headache concept, not applicable for exams. So authorized banks means not only the authorized dealers can trade, also other banks can trade. But who are they? We will be discussing at a later point of time, not now. As a knowledge based session, we can read that, but not to waste the time in the revision classes. But what I want to tell, this is a master direction. Master direction on export of goods. Master directions are not applicable for exams. Sir, why not applicable for exam? Common sense has to be needed to everyone. Point number one, those master directions are given to you or to importer or to exporter or to authorized dealer. Authorized dealer, why we will read authorized dealer? If you become authorized dealer in future after chartered accountancy, then you will read these master directions. No chartered accountant, company secretary or any person in India will know these master directions except authorized dealers, because no professional need to have knowledge on master direction. They need to have knowledge on act. They need to have knowledge on notification. They need to have knowledge on rules, not on directions, because directions are addressed to whom? Authorized dealers, not to you and me. When you go to an authorized dealer will have to check all these things. So this is the author. See here how many directions are given to an authorized dealer by the RBI. We will see the syllabus of FEMA and we will always abuse the government and institute. Why he kept so much syllabus? Then what is the situation of authorized dealer? They have to read all these things. This is one guideline. There are totally 8,900 directions given to our authorized dealer till date. You can search on the RBI website. 8,900 effective notifications and directions are there for them. They will die literally. So this is all the concept they have given. So master directions will be on export of goods and services. These master directions are given to whom? Authorized dealers, addressed to authorized dealer, not to you and me. Okay, for that knowledge sake I've shown this, not for exams. So one thing you need to be clear: authorized person will be apply. Authorized person has to comply with the act, rules, notifications, circulars and directions, but you and me only these three. Okay, that's all. Next issue: power of RBI to issue directions. Obviously, when you get authorization, I will issue direction. These directions are called as a master circulars or master directories. So RBI will give master directions to an authorized person to secure the compliance of act, rules, notifications, etc. What I told you just now, directions and orders are only applicable for authorized person. Is that I said? No. Along with the first three, those last two are also applicable to authorized person. But to all the other first three are applicable, last two not applicable. If you fail to comply, this will be the consequence of contravention. Nothing to read about these penalties. You have to remember. RBI, if it is doubting that the person is doing some or person is sending some returns to me which are incorrect, to verify the correctness, to call for information, to check whether he is properly complying with the act or not, RBI will appoint officers and make an inspection. And the duty of the authorized person is to provide information, explanation, and also render assistance. This is a generalized concept. Just have a reading. So this is what I want to convey about authorized person. And the today's concept is one knowledge concept. I want to make it clear. Though not applicable for our examinations, I have one good knowledge based question called as: many persons will get a doubt. A client will come to me and ask, sir, my son is there in USA. He want to purchase a immovable property in India. Now can I receive amount directly to my bank account? RBI officer will kick you directly at this length minimum. In RBI officer. So directly you can't receive any kind of amount in India. Direct గా రిసీవ్ చేసుకోవడానికి లేదు. Then what I have to do? What is the counter remedy available if that be the case? If that is not possible, then what is the next remedy possible? So the next remedy that is possible is, there are three types of accounts: NRE account, NRO account, FCNR accounts. Nothing is applicable for our examinations, but I think that every chartered accountant should have some common sense when he read any kind of concept. That means chartered accountant means I mean also students. So they should have some common sense when they read an act. What are the three accounts that are possible under FEMA? NRE, NRO, FCNR account. I don't want to discuss everything and waste your precious time, but I just want to convey 2-3 points. After that, this will be available. You can pause the video and you can check into. I have foreign exchange earnings. I went to USA. Okay. I earned a lot in USA. In lakhs and crores I earned in dollars. Okay. I became one of the billionaire in USA. I want to bring entire money to India and I want to invest in India. Can I do that? Yes, you can do. But through which account I should pass through? NRE or NRO or FCNR account? If you want to keep all that foreign exchange amount in a static way without disturbing that, let the interest in foreign exchange get accrued or get doubled and doubled. If that be your intention, go for a FCNR account. FCNR account is a term deposit or a fixed deposit. It will be trading from one currency of the tenure will be 1 year to 5 years. FCNR accounts want to keep it static. That means I have $1 crore with me. I earned a lot in USA. I want to keep entirely that $1 crore in India directly without disturbing that. Can I do? Yes, you can do. Only in foreign exchange you have to maintain that, and the interest will also come only in foreign exchange. How it is possible? You can see in the other regulations. Those are not applicable for examinations. I don't want to waste the time. So this will be denominated in rupees or in foreign currency. Foreign currency. Next issue. No, I am a person outside India. I am a NRI or a person of an Indian origin. Okay. I am a person of an Indian origin or an NRI. I have huge earnings outside India. I want to bring it to India and invest in some house property, etc., etc. All these things I want to do in India. Then what to do? Then you have to open non-resident external account. Which account? Non-resident external. What is non-resident external? Name itself is telling. From other country external to India, you are bringing some amount to India and investing in India or using in India. So that's called as a non-resident external account. Next issue, I have investments in India. I'm a non-resident. I have investments in India. For example, I am in India today. I have 3 houses in my place. For example, I have one residential property and 2 commercial establishments are there with me. All the 3 I want to give it for rent, and I went back to USA. Now property is in India, interest is accrued in India, income accrues in India, rent comes in India. Then I have to deposit everything in India. I don't want to convert into dollars. Then what to do? Then NRO. NRO is a taxable income. NRE and FCNR are tax free. Non-resident ordinary, it is just like a income accruing to you in India. Therefore income tax says that it is taxable. Non-resident external, all these things are not at all taxable. Okay, but sir, I am a non-resident, I will pay tax there, I will pay tax here, 2 times I'm getting taxed. If it is a non-resident ordinary account, then what is my scenario? Check for the DTAA agreement, look at section number 92. Okay, so that's the idea behind this particular concept. 90, all these sections are there. 90 income tax na, you have to check that and see. Why I explain this is, many doubts will come to many students and practitioners as well, because of a lack of clarity on what is NRE, what is NRO, what is FCNR. When I should ask, can I open a joint account of NRE? Yes, you can open a joint account. Joint account with whom? All these things I don't want to explain and waste the time. To make you clear about the concept, I have already prepared a chart or a box type of preparation just to make you clear. So you can please read this by pausing this video. Okay, such that you can have a clarity about the full concept of 3 accounts. None of these accounts are applicable for our examinations. So in a nutshell, how to clear this? I am a foreigner, NRI. I have huge foreign exchange reserves. I want to deposit in India for a good interest rate, but I want to denominate it in dollars. I don't want to use it. I want to keep it as a fixed deposit. Indian bank will give a interest in foreign currency, which will be added to that every year. You may ask a question, sir, what is the benefit to Indian banks? Indian banks and Indian government will get high amount of foreign exchange reserves, which can be rotated to many people, because I told you this is a fixed or a term deposit. For 5 years, you can't touch that. That means for 5 years, it will rotate your money for 5 crore times. It will get a lot of benefit on bid and ask spreads. So that is the idea behind FCNR account. Okay, if you want to keep your money only as a deposit amount. I am a person in foreign and I am having Indian investments. From that I am getting income. I want to deposit in India. You have to open NRO account. I am from a foreign and I earn amount in foreign country. I want to convert that foreign currency into Indian currency and deposit in India. NRE account has to be opened. How this operate, everything I have given in the tabular format. For your clarity, you can refer to that. Hope this session is also helpful to you. So every day we will be coming with some new concepts. Today we completed, as I already promised, export concept we completed, authorized dealer we completed, NRE, NRO we completed. So some important concepts we completed. Tomorrow's session we are going to concentrate on one important concept known as capital account transactions, current account transactions, and realization and repatriation. Timings of that particular session will be announced in advance, minimum 6 hours before. Okay, hope this session is useful for everyone. I'm taking a leave. Thank you very much. Stay home and stay safe. Thank you.